All right, thank you so much for staying with us. The International Monetary Fund has commended the progress Nigeria has made in reforming its financial sector over the past 2 years. This acknowledgement follows IMF's recent Article 4 consultation, which focused primarily on the Central Bank of Nigeria's market reforms and their impact on forex inflows and macroeconomic stability. A major highlight of the report was the overall of the foreign exchange market and the sustained stabilization of the Naira. According to the IMF, these reforms have enhanced price discovery, improved dollar liquidity, and contributed significantly to restoring investors' confidence. The fund noted that Nigerian authorities have implemented major policy shifts that improved macroeconomic fundamentals and economic resilience. Now, the IMF directors expressed support for the CBN's tight monetary policy stance under Governor Olayemi Cardoso, recommending that it continue until disinflation becomes more firmly anchored. They welcomed the end of deficit monetization and efforts to strengthen central banks' governance as foundational steps towards inflation targeting. Mr. Robert Omotunde is an investment manager. He joins me to break this down further. Thank you so much. It's good to have you on the show.
Thank you very much for having me.
I think we should start with what you make of this. I see a lot of commendations for the Apex Bank and the way they've managed the FX market, a bit of stability and all of that. But give me an overview of what you see reading this article in its entirety.
Well, I think that it's majorly in line with what the International Monetary Fund would typically ask of an emerging or a frontier economy like Nigeria. You know, they indeed commended the effort of the government in terms of putting in place some reforms. By now, I think it is clear that IMF is pro-markets. You know, IMF will always support anything that has to do with following the tenets of market in running the system, you know, of administration of government. So, and that is exactly what the IMF is commending in this report, that Nigeria has dropped the subsidy regime for petroleum products, you know, as we all know, for the electricity tariff as well, you know, and as well as the subsidy, so to speak, in foreign exchange, you know, in the foreign exchange market, because we have seen the government move from, you know, the erstwhile managed floating exchange rate system to what is now much more flexible foreign exchange market. Now, the IMF is commending this, and at the same time throwing jabs at the government that, you know, they need to solve the issue of poverty, you know, while all of this is ongoing. Because, of course, you would expect that as you move towards a market-friendly approach to running the system, you know, it will come with all of its inflationary pressure, which they also alluded to, but also noted the fact that inflation has kind of moderated to about 23%, and they expect that inflation will continue to decelerate, you know, as we go along in the year. But that's not to say that, you know, the government will still not, according to them, address issues around, you know, poverty, food security, and all of the issues that we, you know, typically border on what the common man will need. But by and large, I think that the assessment of the International Monetary Fund, IMF in this case, is very apt, you know, in the sense that it's addressing all of the issues that the government has also tried to address, you know, over the years. I mean, we must give kudos to the current administration, and as well as the government under Dr. Yemi Cardoso. I mean, talking about the central bank. Now, because they have also been very clear in the direction of monetary policy. They've been very clear, saying it that our mandate is to bring down inflation, you know, and to ensure stable exchange rate. And in doing that, they've maintained a very tight monetary policy stance. MPR at 27.5%. You know, we can argue or discuss what market rates are now reading because of the body language of the debt management office, who is not willing to pay higher interest rate. But by and large, you know, the central bank has also maintained that tight monetary policy stance. You saw that in the last monetary policy meeting, they didn't budge, you know, the only thing they did was to maintain status quo, you know, and I think in the July meeting, the same thing might still occur, you know, because the central bank is not going to do anything that would destabilize the price stability objective. And the recent gains, I would say, that the government has witnessed, especially in currency management. Because as we see now, we've seen exchange rate, appreciate from as high as 1,750, and today we are printing at about 1,525 or thereabout. And we can still see much more improvement in the coming days. So I think it's good job for the Central Bank of Nigeria. And of course, the assessment of IMF can be further dissected in that light.
Talking about reviewing the 2025 budget, they touched on that.
Yes.
What do you make of the assumptions and the present realities that we face?
Well, I think that the budget is, is typical. I mean, we have projected a 54.9 trillion budget for 2025, under the assumptions of, the level of oil prices remaining above the $70 per barrel. But of course, the recent challenges in light of, instability in geopolitics, right? Donald Trump and, all of the countries within the Middle East and all of the instability that is bringing on board is not making that projection look feasible anymore in terms of, whether the government will be able to achieve its revenue assumptions. But, one of the things that the IMF mentioned is the fact that, there is no more deficit financing.
True.
By the central bank. And I think that is what is informing their comment that the budget must be reviewed. Because if you don't have any other option, any other alternative to funding your budget other than either the revenue you make or more borrowing, then it will mean that, the budget somewhat may need to be reviewed. But the point I have always made is the fact that can we continue? Because technically, if you analyze our budget from the perspective of the exchange rate that Nigeria, currently is printing at, you will say that the budget is still lower than what it historically will be, But then we have to look at the fact that the exchange rate is in a sort of mispricing state. If you ask me, perhaps we could print below 1,000 naira. If our exchange rate is to be appropriately priced, especially when you compare relative to other, neighboring countries within Africa. Now, that said, it then means that if you must achieve the current budget as, proposed or as approved by the National Assembly, something has to give. It's either you are not going to spend as much as you have, proposed, or you will do a lot of more borrowing in the event that the revenue fundamentals have a shortfall. Now we have a new tax law which has been signed but may not take effect until January next year. So it doesn't necessarily affect the current year's budget. But then if you look at the assumptions in the real sense from a revenue point of view, government may not be able to achieve that revenue as set out, especially from the oil price, oil prices that we are seeing at the moment. So what then that means is that it's either the government is doing more borrowing, or we look internally to reduce more of the borrowings that more of the expenditure that we have put out there. Now, usually the consequence will be that the recurrent expenditure suffers, because government again must, the capital expenditure suffers because the government again must continue to run. As government is running, you see most recurrent expenditure, being spent, but then capital expenditure typically is what will suffer, But again, because we are already in July, it is not still impossible for the budget to be reviewed, the assumptions to be reviewed, and also the overall, aggregate expenditure to be reduced as well in order for us to, be much more aligned and be sure that the government is ready to fund the budget. But my guess is that the government will try as much as possible to borrow as much as they can, as you're already seeing. IMF alluded to it. We tapped into the international market towards the end of last year. There is room to do the same now, because if you look at what is going on in the Eurobond space, yields are in favor of sub-Saharan African Eurobonds at the moment. So maybe at some point in the course of the year, in no distant future, the government, the debt management office may be able to approach the international capital market in order to raise some funding. I mean, I tell you that, you know, a typical $2 to $5 billion raised in that market could do a lot in terms of helping to finance the budget. But then you then have to bring the issue back to the sustainability of our debt profile in terms of debt servicing, you know, and which also brings to point the idea of fiscal consolidation, which is that do we really need to spend as much as we are spending at the moment, you know, and this year is very critical. I mean, because if you look at it from the political point of view, as well, it's the final year before the electioneering campaign begins, I would say, because 2026 will be a year before the elections. You know, so, I mean, if you're going to get anything done, this is the year to get it done. So perhaps that advice may be appropriate for the, you know, government to probably look at, you know, a further review of that budget. Now, I'm not asking for them to review it upward, because most times when we review our budget, you know, we tend to review it upward. Even when the fundamentals are not supporting it, you know. So, but then, how do we ensure that we are still able to get some critical projects financed before 2026, when politics now, you know, become the order of the day?
Indeed. Let's look at the enhancing social support for vulnerable households and all of that. I think I'm also interested in that. What sort of initiatives should we be looking at? Because the fallout of these reforms got us to this point. So when this comes up, and even the IMF is saying that diversify revenue base, which you've touched on, and all of that, what do we do to the poverty level and food insecurity?
I mean, I think that let me take it one after the other. In terms of food security, what we need to continue to focus on is to ensure that we have security. Because, you know, if you look at the food baskets states, you know, these are states where there are a lot of insecurity, the Benue, you know, Jos, you know, and the likes of, you know, those other states in the Middle Belt, you know. If the government wants to ensure that there is food security in the country, let us guarantee security of farmers. You know, if you give handout to farmers, or you give support for them to do their farming, and because of insecurity, they are not able to go to the farm, or whatever they have put in the ground, they are not able to harvest, or have been destroyed because of, you know, insecurity challenges, then it's still going to boil down to the same problem, you know, that we've always talked about. So I think the way to solve that is to guarantee security. And, you know, I think if I take what the president said, you know, with the last set of killings that we had in Benue, you know, that they are not going to go unpunished. I mean, there are ways you can do things to suggest that the government has zero tolerance for such misbehavior or such, you know, dastardly behavior by unscrupulous people who just want to destroy the economy. So getting security fixed will help a lot in terms of food security. And it also feeds into inflation. You know, as we may know, even with the rebased, you know, CPI basket, we still have inflation contributing close to 40%. I mean, food contributing to close to 40% of food inflation. I mean, of headline inflation. What that means is that for as long as there is food insecurity problem, it will feed into prices. And once we have higher prices, headline inflation will continue to be on a runaway. And to what extent can the government fix the problem of poverty if inflation cannot be contained? So the way forward is for us to address security problem by ensuring that, you know, we deal with all of those unscrupulous elements who are trying to, you know, get the country into trouble. Because once we fix that, then we can now begin to build confidence in the farmers who can then go to farm, and then whatever support we are giving to them will make more sense. In terms of giving handouts, as the IMF, you know, mentioned, I think the government will need to be a bit careful. Because, you know, the way we got here, I mean, look at the past regime of the central bank, where we had anchor borrowers program,
and all of that.
You know, and all of the
Those
issues.
monies were not paid back.
I mean, I'm not sure the government, I mean, the central bank even expected those monies to be paid back, because the way they were managed, you know, would not suggest that some of these farmers are able to pay back those loans. Because even if you hold them, they may not be able to cough out the money.
Yeah.
Some of them practically just diverted the funds, you know. So, but then in doing social intervention, I think that there is still a market way of doing it more efficiently than direct cash handouts. You know, because again, sometimes we also have to be careful when IMF is giving us, you know, advice. You know, some of the advice are good, but Nigeria has taken a bold step to say we are not going the way of the socialist leaning that brought us into here, when we're paying subsidy on petroleum, paying subsidy on electricity, paying subsidy on exchange rate. We have just left that regime. And then now, to give handout again may be misinterpreted or may even go into another form of wastage. So whatever the government would do now should be towards supporting industry, should be towards the productive sector, and not direct cash handouts. Because again, most times it's abused, or most times,
I totally agree,
you know, some others will corner it and then divert it at the end of the day. So I think the government must be very careful in that. Of course, we must fix the problem of poverty. You know, we must fix the problem of unemployment. Some of the things the government is doing that will create an enabling environment for investment to come into the country. These are the long-term, you know, we've always said it, that when Nigeria starts to do the right thing, we are going to take some time. You know, it's going to take some time. These are the short-term pains that Nigerians must bear, provided the government is sincere and is interested in getting the problems resolved. You know, we will take those short-term pains so that, because, you know, to build, I mean, it's like you want to build a structure that is going to get to, say, 30-story. You will spend some time in the ground, you know. If that project is going to take, say, 5 years to build, you may be in the ground for 2 years, still building, you know, the substructure before the superstructure then starts coming on top. And I think that is the phase that Nigeria is right now. We are building the substructure now because we have decades of doing nothing. Do you understand? And this is the time that we can now start to do something and do things right, right? So we shouldn't, you know, color it anymore with any further wastage by saying we are trying to, you know, introduce some intervention. You know, if there are ways the government can, you know, support businesses, right, with maybe single-digit loans that will be repaid, you know, maybe those are ways that government can come in. But direct cash handout, I am not in support of it, because oftentimes it gets wasted and then you don't even see the impact. What has been the impact of Anchor Borrowers Program on today, you know, the Nigerian economy today? And billions, if not trillions of naira, you know, were expended. So we have to be careful with that.
We have about 2 minutes or more to go. Let's just wrap this up. What do you, in its entirety, what should we take out?
I think our takeout is that the government is on the right path. However, I know that the elections will come in, say, by next year, and then
it will be a pre-election year.
I mean, pre-election year, it's as good as, you know, maybe nothing may get done anymore. I mean, if we are going to be pragmatic. But then, from the monetary policy side, I think that there has been steady in terms of the communication from the monetary policy authority. You know, my take will be that that should continue. And I mean, gone are the era where we, you know, the central bank was also dabbling into politics. But now I want to believe that, you know, the current administration of Governor Cardoso is apolitical. And everything the government, I mean, the central bank is doing at this time is for the stability of the economy. So we should continue on that path. You know, we shouldn't give in to anything that will take us back to the subsidy regime, because it created a lot of wastage. That, I mean, these are funds that we could have used for critical infrastructure, which we could not use them for. So we shouldn't go that path anymore. These are short-term pains that, you know, Nigerians may have to bear for the greater glory that will come in the later years to come.
Thank you so much. It's always nice to have you on the program. I've been speaking to Mr. Robert Omotunde, who is an investment manager, breaking down IMF's report and what it means for us. Thank you so much for coming on live. I appreciate this. All right, now let's do some activity.